Okay, yeah. So let's start off with the question number 3. So, yeah. Following information are given with respect to the product A and B manufactured by Anoma and Company and Basil and Company respectively. So you're given with product A, which is produced by Anoma Company, product B, which is produced by Basil and Company. Okay, so unit selling prices are given, unit variable costs are given, budgeted monthly sales units are given, and monthly fixed costs are also given. Okay, so there are some requirements. So we'll go through one by one each. Compute the contribution to sales ratio for both the products. So what is the formula to calculate the contribution to sales ratio? Contribution divided by selling price into 100. So we need the contribution and the selling price. So here for product A, contribution would be selling price minus variable cost. 50 minus 40, 10. So for product B, it will be 30 minus 9, 21. And the selling prices are also given. So you can calculate the contribution to sales ratio like this. Yeah, 10 is the contribution, 50 is the selling price into 100, 20%. 21 is the contribution, 30 is the selling price into 100, 70% is the CS ratio. Okay, and yeah, so which company would earn a higher monthly contribution? So we have to calculate the total monthly contribution. How do we calculate the total monthly contribution? It is the unit contribution into expected number of units to be sold during the month. Okay, budgeted monthly sale, 50,000 and 20,000 for product A and B respectively. Yeah, we have to show that separately. So per unit contribution is 10 from product A. That into they are expecting to sell 50,000 of product A during the month. So the total budgeted contribution would be 500,000 from product A. The total budgeted contribution from B is 21 into they are planning to sell 20,000. So the total budgeted contribution from product B would be 420,000. Okay. Yeah. So therefore, company A is earning a higher contribution here. 500,000 is higher than 420,000. Okay, then let's move on to the next question. Okay, yeah, compute the break-even point in units for product A. We have to calculate only for product A. So we need the total fixed cost and unit contribution. Here, total fixed cost for product A is 350,000. It is given. So here, how do you calculate the break-even units? Total fixed cost divided by the contribution. So total fixed cost was given as 350,000. That divided by 10. That is the per unit contribution. 350,000 divided by 10 will be equal to 35,000 units. That is the break-even number of units for product A. Okay. And then compare the total profit expected from product B based on the budgeted sales volume. So the total profit under the budgeted sales volume for product B. So what is the budgeted monthly sales units? 20,000 is the sales units for product B. So the total contribution, total fixed cost for the month would be 200,000. Using those information, we have to calculate the budgeted profit for the month from product B. Yeah, total contribution for product B for the month would be per unit contribution is 21. That into budgeted sales, 20,000 into 21 would be the total monthly contribution from product B. That minus the total fixed costs, 200,000 will be 220,000. Okay, so that will be the profit from product B for the month. And the next requirement is draw a profit volume chart for product A showing the profit expected at the budgeted sales volume. So we have to draw a profit volume chart for product A showing the profit expected at the budgeted sales volume. So here we have to draw it for product A. So let's do this. So you can name the two axes as profit or loss and quantity. So you can draw the profit or loss line. So the point where profit or loss line touches the quantity axis will be your break-even point. 35,000 units is the break-even point for product A. Break-even units for product A. And they are planning to sell 50,000 of product A. So what will be the profit from 50,000 of units of A? So we have to calculate the total contribution from 50,000 units. 50,000 into 10 would be the total contribution. That minus 350,000 of fixed cost. Yeah, 35,000 of fixed cost. Okay, so that will give you the total profit from 50,000 of units, which will be 150,000. Okay, you can see this 150,000 is the profit from 50,000 units of product A. So this is how we draw the profit volume chart. You need not to scale these diagrams. You just have to show these details in the correct place. Okay. Determine how much should be the expected monthly sales value for product B if the target profit per month is 150,000. So we have to find the sales value to reach a profit of 150,000. So we can utilize that target units equation. Okay? Target monthly sales value. Target monthly sales value equals total fixed cost for product B is 200,000 plus the expected profit. They are asking us to calculate the number, calculate the sales value required to meet a profit of 150,000. So the expected profit is 150,000. When we divide this directly by CS ratio, we can directly get the sales value. So here divided by 70 will be 500,000. So we need 500,000 of sales to reach a profit of 150,000. Okay. And then the next one. Determine the new break-even point of product A in sales value if its selling price would reduce to 45. So new break-even point for product A if the selling price reduced to 45. So we have to recalculate the contribution. Yeah, recalculation of the contribution. Now the selling price has been decreased up to 45. Variable cost will remain constant. So our contribution will be 5 per unit. So our total cost will total fixed cost will remain constant. 350,000 divided by 5 of the contribution, that into 45 is selling price. This will directly give you the sales value. Sales value as the answer. 3.15 million. 3.15 million. Okay. They're asking us to calculate the sales value, so that is why we divided it by contribution and multiplied it by sales. Here, how much should be the expected monthly sales value? Sorry, determine the new break-even point of product A in sales value. They ask. Okay, and then Anoma and company plans to introduce new technology to reduce the variable cost. Reduce the variable cost. This will double the monthly fixed cost. Double the monthly fixed cost. What is the minimum? Sorry, what is the minimum? What is the minimum amount by which the unit variable cost of product A should decrease? What is the minimum amount by which the unit variable cost of product A should decrease if the company wants to maintain the same break-even point computed under 3 above? So if they want to maintain the same break-even point in units, by how much should the variable cost be reduced if the fixed cost is getting double during the month? So that is the question. So we have to do some workings here. So now the break-even point has to be remained as the same. So it's 35,000 units. And total fixed cost is getting double. So 350 plus 350 is 700,000. From that, we can get the contribution needed. So the contribution needed from each unit is 20. So using the contribution formula, we can get the variable cost here. Selling price will remain constant, no change in the selling price. Now we know the required contribution, 20. So how much should be the variable cost? 30. So when we compare this with the original information, original variable cost was 40. Now the variable cost is 30. So variable cost has to be decreased by 10. Has to be decreased by 10 rupees to maintain this level of break-even units. Okay. So okay, now let's have a look at the question number 3. Okay, sorry, exercise number 4. Anura PLC manufactures and sells a single product. The details relevant to the production are given below. Direct material 3 kilograms per unit, 25 per unit. Direct labor 2 hours per unit, 30 per unit. Variable overhead 16 per unit. Selling price 80 per unit. Annual fixed overhead 120,000. Annual production and sales 20,000 units. There are some additional information as well. The company had decided to carry out a sales promotion campaign in the next year by considering the following. To spend additional advertisement expense of 40,000. To increase the weight of the product by adding 0.5 kilogram of raw material. To keep the current selling price unchanged. It is expected that this campaign would increase the annual sales volume to 50,000 units. The wage rate would increase to ₹16 per hour due to labor law. Okay, so we have to take these adjustments under consideration when we are considering about this sales promotion campaign. Okay, so contribution per unit of the product at present and next year. Okay, contribution per unit of product at present and next year. So contribution per unit for the product at present means excluding this campaign related information. Next year means including this campaign related information. So let's calculate for this year. So we have to identify the variable costs from this. Direct material, direct labor and variable overhead are the variable costs. Okay, and the selling price is given to us as 80. So from that we can get the contribution. And also annual fixed overhead costs are also given to us as 120,000. Okay. Yeah. Variable cost equals direct material, direct labor and direct other. So addition of these three will be the contribution 10. Sorry. Addition of these three will be the variable cost 70. So when we deduct this 70 by the selling price, which is 80, 80 minus 70 will give us the contribution per unit as 10. Okay, this is for this year, present situation. And next we have to calculate for the next year. Okay, so when we are calculating the contribution for the next year, we have to take, we have to consider about those adjustments here, about this information. So to spend an additional advertisement expense of 40,000. So will that affect our contribution? No, because that is a part of the fixed cost. To increase the weight of the product by adding 0.5 kilogram of raw material. So here, per unit we are utilizing 3 kilograms of direct material, and the total cost for all these 3 kilograms is 24. So what will be the per kilogram cost? 24 divided by 3, 8. So 8 per kilogram is the direct material cost. So 0.5 means half of a kilogram. So what is the price for 0.5 kilograms then? 8 divided by 2. So that is why our direct material cost is increasing by 4. Yeah, 24 plus 4. And then the wage rate would increase to rupees 16 per hour. So how many hours we are needing to produce a single unit? 2 hours per unit. So what will be our direct labor cost? 16 into 2 hours. And there will be no change for direct other expenses. We can take that as 16. So our total variable cost would be 76. Okay. And our selling price will be a constant. So our variable cost got changed. And our new contribution for the next year would be 4 per unit. Okay. Break-even point in sales value for the next year. So for the next year, we have to calculate the fixed cost as well. Yeah. It is expected that campaign would increase the annual sales volume to 50,000 units. And here, to spend additional advertisement expenses of 40,000. So our fixed cost has to be increased by 40,000. Annual fixed cost is 120,000. In the present situation, plus that 40,000 of increment. Yeah. That is for 160,000. 120,000 in the present situation plus that 40,000 due to that sales campaign is 160,000 divided by new contribution 4 into 80. We have to give the sales value now into 80. Total fixed cost divided by contribution into selling price. we're using the contribution to sales ratio here, okay, which will give us the sales value as 3.2 million, okay. And then the MOS in units for present and next year. To calculate the MOS units for present, we need to identify the present break-even point. So what is our present break-even point? Our present total fixed cost is 120,000 and we calculate our contribution as 10. So our break-even number of units would be 12,000. So in the present situation, how much are they expecting to sell? 20,000. It is given to you in the question. Okay. Yeah, expected number of annual sales and production is 20,000. Yeah, with 20,000 minus 12,000 of break-even units will give you the margin of safety as 8,000 units. And for the next year, expected number of units is 5,000. That is also given here. Yeah. It is expected that the campaign would increase the annual sales volume to 50,000. To 50,000. Yeah. So that is here. Expected number of units is 50,000 and the break-even point we calculated as 40,000. So the margin of safety in units for the next year would be 10,000 units. Okay. And then we have to calculate, no, we have to indicate whether the company earns a higher profit at the present situation or the next year by taking into consideration this campaign related information. Okay. So how do we calculate the profit for the present situation? So another simple equation to calculate the profit would be margin of safety units into contribution per unit. So using this, we can easily calculate the profit. Present situation, we calculate the margin of safety as 8,000 here. For the present situation here. Under the previous requirement. Yeah, 8,000. Okay. So the contribution per unit would be 10. So 80,000 would be the profit in the present situation. Profit in the next year. So margin of safety units is 10,000 and the contribution per unit for the next year would be 4. So the profit for the next year would be 40,000. So therefore the company earns a higher profit at the present situation. So we can reach to a conclusion saying that this campaign is not really effective actually, because in the present situation our profit is much higher. Okay. And now let's focus on question number 5. The following information has been gathered with regard to an educational tour organized by the Commerce Society of a school. So a transportation cost per bus with a seating capacity of 60 passengers. So this bus cost in nature is a fixed cost because it does not change with correspond to the changing the volume of production or volume of output, number of passengers in this scenario. Cost per identification badge. So whenever they use this term per, cost per identification badge, cost per student, cost per unit, that means it is getting changed with correspond to the level of production, meaning which those are variable costs. Okay. So this cost per identification badge is a variable cost. Printing cost for the tour banners is again a fixed cost. Okay. Cost of organizing the trip is also a fixed cost. Meals cost per student is a variable cost. Cost of water bottles per student is a variable cost. And ticket cost per student to visit all the places arranged, a variable cost. Charge of the photographer hired, a fixed cost. Fee to be charged from a student is the revenue here. Okay. So there are some requirements. So we'll go through one by one each. Expected total fixed cost of the trip. So you have to extract all the fixed cost elements from these information. Okay. Here, cost of the bus, tour banners, organizing cost, photographer fee. Total fixed cost is 24,000. Number of students to participate in the trip to break even number of units they asked. So now we have the total fixed cost, then we need the contribution per unit. So from those information, you have to extract all the variable cost related information. Batch cost per student, meal, water bottle, tickets, all costs are variable costs. So that will give you the total variable cost per student, 400. So we know the selling price. It was given to us in the question. Here, fee to be charged from a single student is 1000. Okay. So 1000 minus total variable cost here. 1000 minus 400, 600 is the contribution per unit. So using this, now we can calculate the break-even number of students. Yeah, 24,000 was our total fixed cost and 600 was the contribution per unit, and we need 40 students to break even. Okay. And then number of students to participate in the trip to generate an excess of 6,000. So target number of students to earn a profit of 6,000. So you can use this target units equation, total fixed cost plus expected profit of 6,000 divided by contribution of 600. We need 50 students to reach a profit of 6,000. Okay. And then two suggestions to increase the amount to be transferred to the general fund of the Commerce Society, assuming that the fixed cost of the trip cannot be reduced. So two suggestions to increase the amount to be transferred to the general fund. Okay. They have given a special note here. It has been decided to credit any excess of the trip to the general fund of the Commerce Society. So any profits, they are crediting it to the fund. So under the fourth requirement, we have to make some assumptions to increase this transfer, increase the profit, assuming that fixed cost cannot be changed. So what can we do? Yes. Yeah. Yes. Increase the number of students, increase the fee to be charged by one student, or decrease the variable cost. And a statement showing the excess or shortage from the trip if number of participants are 60. So we have to show a simple profit or loss statement. Yeah. So cost, total income from 60 students, 1000 into 60 is 60,000. And the total cost, we can break it down into two components, variable and fixed. Total variable cost from a student is 400 into number of students 60, total will be 24,000. And the total fixed cost we identified as 24,000. Okay, so when we sum this up, the excess amount will be 12,000. Okay, so you have to show each of these components separately. And then the fee to be charged from one student in order to break even if the number of students to participate is 30. So a fee to be charged to break even if number of participants are 30. How do we calculate that? So the fee to be charged to reach the break even point. So what is the fee to be charged to cover all the costs of this activity? So first we have to calculate the total costs. Total fixed cost, we know it is 24,000, and total variable cost if 30 students are participating. Variable cost per student is 400 into 30, so the total variable cost for 30 students will be 12,000. So then what will be our total cost? It will be 36,000. So this divided by number of students will give you the fee to be charged by one student. Simple. Okay. So total cost divided by number of participants will give you the amount to be charged by one student, 1,200. Okay. Okay, so now let's have a look at the exercise number 6. So Rohan is planning to start a vehicle hiring business for weddings by using his luxury motor vehicle. The following are the estimated expenses for the motor vehicle: insurance per year, revenue license per year, repair and maintenance charges per month, annual depreciation, driver's salary, petrol cost, annual administration cost, motor vehicle hiring income. So first of all, I will explain this driver's salary part. So here, driver's salary, we calculate it 9,000 per month plus 10% of the hiring income. So what is the hiring income? Motor vehicle hiring income is 100% per kilometer. So at the end of the month or at the end of this accounting period, 10% of the total hiring income will be added to the driver's salary. So then what can you say about this 10%? This 10% component is a variable component, which will vary depending on the number of kilometers. Okay, so this part is a variable component. But this 9,000 per month, this 9,000 per month means for a year 9,000 into 12. So that component is the fixed component here. This 10,000 is a varying component based on the number of kilometers travel. Okay. So this driver's salary is an example for semi-fixed cost. So number of kilometers to be run to cover the annual cost of the business. The number of kilometers to be run if the annual profit is 350,000. If the annual profit of rupees 350,000 is expected from the business. Okay. So what is the break-even number of kilometers? First they are asking. First of all, we have to carefully identify what are the fixed components from these data. Insurance per year, 58,000 is a fixed charge. Revenue license per year, 8,000 is a fixed charge. Repair and maintenance charges per month. So 5,000 into 12 will be the annual total repair and maintenance charge. Annual depreciation 500,000. And the driver's salary is a fixed component. As I explained before, 9,000 into 12 will be the fixed component. We do not take this 10% of hiring income because that is a variable part. Petrol cost is again another variable cost component. Annual administration cost will be a fixed cost component. Okay. So here all the fixed costs addition would be 784,000. So what is the selling price? Selling price is given as 100 per kilometer. Hiring income 100 per kilometer. And how do we calculate the total variable cost per unit? Here 20 is the petrol cost per kilometer plus 10% of the hiring income, which will be added to the driver's salary. So 10% of the hiring, 100 is the hiring income, 10% of that would be 10. So this 10 driver's salary is also a variable cost. So what will be the total variable cost? This 20 of petrol cost plus 10% of that driver's salary variable cost component. Okay. So here you can see variable cost as 30, selling price as 100. So our contribution will be 70. Okay. So our total fixed cost is 784,000 divided by 70 of contribution. Our break-even number of units would be 11,200 kilometers. The number of kilometers to be run if an annual profit of 350,000 is expected from the business. 350,000 is expected from the business. Okay, we can utilize this target in its equation. Total fixed cost is, we identified that before, 784,000 and 350,000 of target profit divided by contribution 70. So what will be the target number of kilometers? 15,200. Okay. Now let's focus on question number 7. A company has undertaken to introduce and sell a new product and a trade exhibition to be held for 10 days. This product is provided to the company by its supplier at a cost of 4,500 per unit. Although a unit of this product is expected to be sold at a price of rupees 8,000, a 20% discount on this price will be offered at the exhibition. The expected costs are followed. So here, from this 8,000 rupees of price, we are providing a 20% discount. So for the calculation of this break-even point related information, we take the net price, 8,000 minus this 20% of discount. Okay, and the rent for the stall is given, printing costs of leaflets are given, allowances to the manager of the stall, a price of a cup gifted with every product of unit sold. This is again a variable cost. Okay, and allowances to the sales assistant per day. Total fixed cost of the activity first we have to identify. So this rent for the stall is a fixed cost component. Printing cost of the leaflets is again a fixed cost component. Allowances to the manager of the stall, again a fixed cost component. And this price of a cup gifted along with the number of units produced, units of products sold is a variable cost component. We do not take that. Allowances to a sales assistant per day. And 2 sales assistants will be recruited for the period. So what will be the total cost associated for the sales assistant? 1,000 per single sales assistant, that into number of sales assistants 2000, and that into, this is the per day charge. So number of days, 10 days. Okay, 10 days. Okay, 10 days. So 1000 into 2 into 10 will be the total allowances to the sales assistants. Okay. Then you will be ending up with 90,000 as the total fixed cost. Then the unit to be sold to cover the total cost of the activity. So now we have the total fixed cost, and we need to identify the selling price. Yeah? We have to get the net selling price. 8,000 into 8%, 6,400. 8,000 minus 20% of discount. Okay. And what is the variable cost of this activity? Yeah. Company buy its supply at a cost of 4,500 per unit. So per unit, the cost charged by the supplier is 4,500. Plus this price of a cup gifted with every unit of product sold, 100. So this 4,500 plus 100 will be the variable cost of this activity. Okay. So here 100 plus 4,500, 4,600. So what will be our contribution then? 6,400 minus 4,600, 1,800. So what will be our break-even point? Sorry, this should be units. Okay. So our break-even units would be this 90,000 of fixed cost divided by 1,800 is 50 units. Okay. Yeah. And next question: units to be sold to earn a profit of 270,000. So again, we can use the target unit equation. Total fixed cost is 90,000. Expected profit is 270,000, and the unit contribution is 1,800. So the target number of units to be produced or sold to earn a profit of 270,000 is 200 units. Okay. And then the final requirement: the profit earned at 100 units of sales when a 10% commission on the selling price is to be paid to the manager for every unit sold, in addition to the allowances paid to the manager. So consider each of these situations independently. Profit earned at 100 units of sales when a 10% commission on the selling price is paid to the manager. So we have to add a 10% commission. So will this commission be a fixed cost or a variable cost? This is a variable cost because it is getting changed with correspond to the change in output level or activity. Okay. So here we have to recalculate our variable cost here. Based on the selling price, we are giving a 10% commission, which is a variable cost. So 6,400 into 10% plus the previous variable cost, 4,600. So the new variable cost will be 5,240. And there will be no change in the selling price. So our new contribution will be 1,160. So what is the profit from 100 units? We have to get the total contribution. 1,160 is the new contribution into 100 units will give you the total contribution. That minus the total fixed cost 90,000 is this 26,000 of profit. Okay. Okay, so this is a final question. Yeah. Sumaga Education Institute is intending to conduct a 2-day seminar for students and it is expected that 200 students will be participated. It is expected to charge rupees 1,000 from a student for 2 days, and estimated expenses are as follows. Expected expenses per student are given. So here, per student means these are variable costs, and other expenses expected for the 2 days are also given. So in nature, all these costs are fixed costs. Okay. Electricity, hall arrangement, sound arrangement, allowances for resource person, and rent for building per day is given. So yeah, it is conduct a 2-day seminar. So we have to get the total for 2 days. Requirement first one. Calculate the number of students should be participated to cover the cost of the seminar. Break even number of students. So first we have to get the total fixed cost. Yeah. electricity, cold arrangement, sound arrangement, allowances, and rent for 2 months. That rent figure 15,000 into 2 days. So the answer is 30,000. Total fixed cost is 105,000. And all those variable costs, we have to get the total 300 per student. Variable cost per unit is 300. From this, so in the question it was given that they are expected to charge 1,000 from a student. So the selling price is 1,000, variable cost is 300, contribution would be 700. Using this, you can get the break-even number of students. 105,000 of fixed cost divided by 700,000 of contribution. The break-even number of units would be 150 students. Okay. What is the amount of profit if 200 students participate to the seminar? So you can calculate it like this. Total sales income is 1,000 per students into 200. It is 200,000. Variable cost from a student is 300. Variable cost per student is 300, and that into number of students are 200. Total variable cost is 60,000. And from that you can get the total contribution. When you deduct 105,000 of total fixed cost from that, you can get this profit of 35,000. And using MOS units into contribution equation also, you can get the profit value. Okay. And in order to earn 56,000 of profit, calculate the number of students to be participated to the seminar. 56,000 of profit. You can utilize this equation, target units, TFC plus expected profit of 56,000 divided by contribution 700. So you need 230 students to participate in the seminar to earn a profit of 56,000. Okay. And then the final requirement. If the student participation will be increased by 50 students, determine the incremental amount of profit. Student participation will be increased by 50 students. Determine the incremental amount of profit. So student participation in the here, student participation is given as 200. 200 students will be participating. Expected amount is 200. So in this part, they are telling that it will be increased by 50 students. So the total expected number of participants would be 250. So what would be the incremental profit? Yeah. Profit equals MOS number of units into contribution. So how do we calculate the MOS number of units? Expected number of students are 250, and our break-even number of students are how much? Break-even number of units are break-even number of students are 150, and expected participants are 250. So the gap between expected number of units and the break-even number of units is the MOS units, 100 participants. MOS units are 100 participants. Into contribution per unit is 700. Profit will be 70,000. So what will be the profit from 250 participants? 70,000. So what is the incremental profit from these additional 50 participants? Okay. What will be the incremental profit? Incremental profit would be, at the previous scenario, we identified the profit from 200 participants is 35,000. And in this scenario, we identified profit from 250 participants is 70,000. So the incremental profit from these additional 50 participants is 35,000. Okay, so that is the incremental profit. Yeah, so that marks the end of our discussion. Thank you.